Yo, what's up, my beautiful people? What's up, everyone? So, finally, good have finally dumped into our POI that we have been expecting it to come into, right? And you have been giving us some reaction from that point. So this is like the last point of for gold, right? This is actually the last point for us to see a buy. So if this buy fails, then we'll now be looking towards to sell to the downside, to take out all these structural liquidity resting above those lows, right? So before I go on with this, I want to make some very special announcements. I want to say something very helpful to people. So by God's grace, we are ending up our May June sections, which are May June training sections. So we'll be getting more people for another July August sections, right? Impact July August sections, which means if you want to learn forex, you have the opportunity to learn this forex, and if you are lucky enough to learn it for free of charge, right? So learn it for free of charge. And then the requirement is just like for those people that have been messaging me before now, that have been telling you guys to hold on. I was also waiting for us to finish this badge. Yeah, so now getting more 100 people to what, to train them again. So what are we training you guys on structure, market structure, and then my personal trading style and also personal trading strategy, right? Teaching you guys all this that I show you here every day, right? Remember, market structure is always the king. Market structure is always the king. Like every other market structure, every other market forex trader usually says, right? Even your top forex trader will always tell you for market structure is always the very good key. So if you are a beginner or you're a forex trader that has not yet been profitable, I can assure you that one of the things that is making you not to be profitable in the market is your market structure. Even though you know your strategy so well, and then when you see your strategy, you enter that market, you enter that trade, and it will still stop you out. What is causing that is your market structure. As you can see, if you have been following me for a while now, you will notice that most of my trades are always TPs. I don't have any SL, little SL. And if I check, I will show you guys why that SL, because probably I mark out the wrong way or the wrong market structure. That's only when you see, like I usually show it on my, if you watch my previous analysis videos, you will see all those things. Now why that mistake happens is always because of market structure, marking out your market structure wrong. So first thing first, I trade market structure, then I use structural liquidity modules to enter my trade. When I do my structure correctly, I have 3 structural liquidity modules that I use, which I will also be explaining it also in that training. So it's a 2-month training, intensive training of this. So for those that have been messaging me, you have secure yourself a slot. I will always send you guys an invite when the next one have started. I'll send you guys an invite. But for the rest who want to register, make sure you're following me so that you can always know when the link will be on my bio for you to register. The link will be on my bio for you to register. So most the early registrations, the people that register early, they get free trainings, they get free mentorship, they get free everything. All the whole cost and everything will be free for them. And then for the late registrations, they are going to be paying a fine of $10, a little fine of $10. That little fine of $10, that's to show so that's to make you be more in this forex training that you are going to apply for. So if you are not following me, make sure you are following me so that anytime you see my video, because I post analysis every day I post analysis every day. So make sure you're following me. Anytime you see my video, you can always go to my bio, because by from now till next week, that link will be up on my bio for people to register. Right? That link will be up on my bio for people to register. So the first 30 people to register will get a free mentorship program. Then the remaining will be a late entries. Plus those free people that have been messaging me on my TikTok and Instagram, those people will get free, plus 30 extra that will be joining from the link will also get free. Then the remaining percent will be paying a fine of $10 for their late entries, right? Late entries. So that is that for the announcement. So make sure you're following me. Make sure you're following me so that you always get updated. And from now to next week, you always see the advert, or will I say an information about this training coming up. Every single video that I make, the training will be there to notify you guys. So this is a one-time opportunity. Like every other mentors will always tell you, if you want to learn forex, start with market structure, right? Start with market structure, and this is what I base on. I trade more with market structure. I know, like, perfectly mark out market structure. That's how I trade. Before I look for my entries, my entries are always my liquidity modules, which is the liquidity module A, liquidity module B, and liquidity module C. I'll be teaching you guys all those things. For free of charge. So make sure you're following, and then like the video also. So if you keep coming to message me from today, you might not get the free mentorship. So only thing you need to do is just probably follow me now, so that anytime you keep seeing my videos, you can always go to my bio and check, right? And hopefully you can before you enroll, then there will still be a free slot for you before the late registration fee also. So let's go. So now this gold, we have finally pulled into our POI, right? So finally pulled into our POI. And then I'll also be teaching you guys about this POIs and breaker blocks. I valid POIs. Like if you can see, anytime I mark out my POI, markets usually react from those points, either to sell or to buy, right? And if markets break that point, that's when you see that dump coming. That's probably breakdown. Then you see that dump of markets falling, right? Those the things that you can see on my POIs. Markets are always reacting from those POIs. That's to show you how valid those POIs are, right? How valid, both from the daily, because you can see this is the daily, this is the 4 hours POIs, right? You can always mark out your POIs correctly. These are part of what market structures, right? Like every trader will tell you, even your Tony Ike will always tell you his strategy is not for beginners. Why? Because you have to know the basics, which is market structure. He's always saying it. He cannot be teaching market structure, because that is like the most stressful part of teaching forex, teaching someone market structure. And if you are getting this for free or even less than $10, that means you should get advantages of it. And if you're a forex trader and you are not profitable, or you are always hitting SL, these courses are also for you. It is also for you, because why? You are not marking your structure correctly. Anything that makes you, that's why you see Tony Ike, when he takes trade, all those DAX, Tony Ike, Kojo FX, all those people, when they take their trade and they put their targets, everything usually goes aligned, because why? They do their structure very well. And they always tell you, if it's an advanced class, they will tell you have to go and learn the basics, which is market structure. That we can't teach you market structure. So getting this for free is going to go a long way for you. It's going to go a long way for you. So the goal is to train over 300 people before the end of this year. Yeah, two months for 100 students, right? So we just completed the first 100, the other 100 now, which will be ending by this month. So by next week, next week, there will be a link for this July, August. So Let's push on. So market have actually tapped into this our POIY with this structural liquidity right on top of it. So we are hoping that markets will continue to the upside to take out this week and also take out this final week right here, right? So looking at our weekly our entry time frame, which is our 45 minutes, or your 15 minutes, which is the entry time frame, what are we still expecting? Now we break structure to the downside. Why? To facilitate the pullback for this 4 hours structure, which is this 4 hour structure right here, right? So this was the 4 hour structure. This break of structure is the daily break of structure. Let's go to the daily so that you can see how we started the market analysis. So this was a break of structure from the daily. Then after a break of structure, there should always be a pullback, right? Which we are facilitating that pullback, which is this pullback you are seeing here, right? Now market have tapped into this 4 hour POI, which is not the best POI for now. Why do I say it's not the best POI? Because it's not really inside our 50% zone, and our structural liquidity is not also inside this 50% zone. So the highest is just be 50% of chances that market will still push higher, right? That is if we see our liquidity module structure right there. If we do not see any liquidity structure right there, we are not entering the trade. That's to show you that this POI is not going to hold. So that is all the confluences you see for you to avoid losses. Like now, some people have entered this trade even without any confirmation, or even with this candlestick. Like people that usually enter with candlestick, they will see this kind of rejection right here, right? They will enter, and then unfortunately market will just move up a little bit and what, push back down, trying to clear up all this liquidity. Now what drags market is liquidities. Liquidity is what attracts, and liquidity is what pushes markets. It attracts markets and it also pushes to the next opposite side, right? So that's what pushes market. So these are liquidities right here, all these lows. They can be attracting this price to still come back and clear this order. And if this order right here is not enough for this market to go up, eventually it will still come down. So marking as POI does not give you the confirmation that what markets, if maybe market get there and start reversing, it doesn't give you that confirmation of markets going to your direction until you see that those liquidity have been grabbed. And how do you see those liquidity have been grabbed? By knowing your market liquidity modules, right? If you can use those liquidity modules, spot it in the proper area, it gives you a very high probability trade. That's why you can see us bargain more on gold and the GBP USD. What happened yesterday, if you go to my other video, you see when I was analyzing that GBP USD, the market pushed down massively to the downside because it grabbed liquidity above that high. I will get there in a minute, but let's just finish with gold, right? Now it has gone into a 44 hours POI, and then we are expecting what, a break of structure first. After that break of structure, then we'll now be expecting our what, liquidity modules to appear for us to take the trade, right? So that is what we are expecting on this. Now this liquidity has been taken, right, and it has keep coming back to grab liquidities, because all this week you are seeing right here are grabs of liquidity. So hopefully it will get enough liquidity to break that high. You can see it's struggling to break those highs, right? Struggling to break those highs to the upside, to the resistance zone. Even support and resistance, when people trade support and resistance, they are still the same with market structure. Now let me show you something here now. What is our strong high and strong low, or weak high and strong lows? They are what we call support and resistance. They are what we call support and resistance. Now when market is like, let's see this now, when someone that trades support and resistance comes to the market, what do you look for? You look for points that markets react to every single time, right? That's what it looks for. Now in this our strong high, like you see this strong high now, if you see this POI right here, if you push this POI to the backside, right, what can you see? Markets react from those points every single time. That is why it is called resistance, and that is why it is called what, a strong low. Now see, market came in, it reacted from it again, it didn't break it, and eventually came back and broke it, right? Then break to the upside. Now when it comes back, you can always see those reactions when market gets back to that point, right? Even here, you can now see it properly on this point. Why? You can even see head and shoulder. This was the buy we took to this upside last week. Was it last week? Yeah, last week. This was that buy, and it was still from this zone. You can see it. It touches first, it bounced up, it came back, tried to break it, it wasn't able to break it, it came back up, giving you what? Head and shoulder pattern right here. You can see this is an head and shoulder. This is your head and this is your shoulder. I don't trade all this, but you always see all those confluences right there. Well, this will not enter from this your head and shoulder, your stop loss below this low, targeting the next high or your previous high, right? So that is it. All those things are always there. Now let's go to our week high now. This week high. If you can see, this is the other block of this week high. If you drag it to the back, what can you see? Market is always reacting from those points. Market is always reacting from those points. And if you can see, just only two reactions. That's why it is weak. Do you not see how it is? That is why it is weak. That is why when markets come back now, you can easily break it because it's weak high. But this is a resistance, right? That's supposed to push market to the downside, which did its work. It pushed market, it came back again. It has also pushed market to the downside. And hopefully, if you come back again, it might still push market to the downside. We don't know because we don't know what market is doing. So you can eventually break it and still target this high to break out that high, right? So that's why it is called weak high. Because market just reacted to it few times. That means market can still come back and also break it out, right? So that is that on gold. That is that on gold of what we are expecting on gold. So lastly on GBP USD, because I don't want to be creating long video anymore, right? So now GBP USD, we have this our daily POR. We are expecting market to come back with this structural liquidity right here. Going to the daily, let's look at it properly. Right on the daily, or on the daily, we have what? A break of structure to the upside. We have this sweep right here. The market gave us this probably as inducement of structural liquidity right here, right? So market is currently reacting from our structural liquidity, right, to probably entice sellers or to entice buyers to keep buying. Remember, anytime you have a break of structure, you even have two break of structures, we should be expecting what? A pullback. You'll be expecting what? A pullback. After first break, you should expect a pullback. Second break, you should not expect that pullback to not happen. That's why you had this pullback right here after the second break. So now, market is reacting from what? From the structural liquidity. And we also have the structural liquidity right here, which is our main point where we are looking at from, right? If market have also what? Reacting from this point to the upside. So we will always follow what market is doing. Now, on the daily, for that pullback to start, we have to see what? A break of structure on the 4 hours, which is the proper market analysis, right? A break of structure. Now we have seen a break of structure, right? But just a minor break of structure, but which is still valid, So we had this first break of structure, we have this second break of structure, right? Which is not really a break of structure, it's a sweep. Why I call it a break of structure? Yeah, okay, this is a 4 hour, so it's a sweep. It's not even a break of structure, right? We have this break of structure. This is a break of structure because it broke this high. Look at this high. It broke this high right here. I only put it here in order to make my chart neat. This point is a wick. It swept the high. That's why it pushed down. If a wick break above your high is a sweep, you'll be expecting what? Markets to reverse to the downside, probably making a pullback or breaking. If you break the structure, it becomes a break of structure to the downside, market structure shifts, right? I only put this here for it to not to look so messy on my charts, right? Now what do we have? We have a sweep of this high, which this sweep did its work by was breaking this low right here, which is the 4 hours low. Oh sorry, that is a break of structure. Right? So which have done his work by breaking this high. So we are expecting what? A pullback to the upside. Now, when this thing happened yesterday, I was expecting a buy on Monday, a sell, sorry. But I don't trade on Monday. That's why I didn't take that trade. I also shared it on this channel, right? If you check my previous videos, you will see it. See what market did. It swept this high right here. It swept this high right here. Let me make it visible on the minute time frame. So going to our entry time frame, This is that sweep that happened. This is where it swept that high. Now, where is the low that caused this high? Where is the low that caused that high? Let me go down to the lower time frame. This was the break. And where is the low? This was the low that caused this high to break. If market is, if this low grabbed enough, if it grabbed enough liquidity, it's going to break the low that causes that high. But if it did not grab a lot of liquidity, it's going to do what? Push more higher and continue to the upside and break the structure completely, right? But how do you know that it grabbed the liquidity? Is when it breaks that low that causes the what the sweep. So this was the sweep, right? On the lower time frame, it has to break a structure, a swing structure. Meanwhile, not a minor structure. Now this was the main structure that broke that low, and when markets sweep that this thing, it pushed to the upside, having a break of structure, and then it came back and took out that low that caused that sweep. Now, mind you, this point here is not a continued breakup, because people look at it as what? As probably market have tapped into this. They will look at this low, right, as the low that causes it to break, and the market have tapped into that break of structure. No, you have to look at your 4 hours, what 4 hours is doing, because that's where your setup should be, right? Your lower time frame should be what? Your entries. And if you can see all those points, this is that point that pull back before it comes to the upside. Still, it didn't still break that low. It still pushed down to the downside. So that should tell you that what markets have shifted bearish with an impulsive movement. Impulsive movement, which it broke this low right here, right? It broke the low right there. And then markets eventually shift, came back to the upside, giving us this as structural liquidity. Now the POI, it taps into that POI and started going down. This is supposed to be the entry. If you watch the video, I said it that this was supposed to be the entry of this trade that happened, right? Targeting the weak low, targeting this weak low, either this weak low right here, targeting here. But I waited, like I don't take trades on Monday, so I said anyhow market is still far from here, so there will be a chances of me re-entering. So I saw this re-entry after market tapped into it, it break that low, right? It gives us a break of structure to the downside. So I was expecting to buy from here with this structural liquidity, sell, sorry, but eventually the pressure was so high that it breaks the previous low and still continue to the downside. So that is the mentality when you have your structure aligned properly, right? If you have your structure aligned properly, you always see that. So we are still expecting market to pull to this upside, right? But this entry now, we will now wait for what? We will now wait for confirmation. Why? Because market have pulled back into this area and swept the low, right? So it's a tendency that market can still come back and break out, because this is a break of structure. This is a pullback, right? So that for this break of structure, this is a pullback. So there will be expectations of what markets still pushing to the higher side to create another higher high. So that's why when you get here, though we have had a break of structure, right, we will still wait for an entry on the entry time frame. Wait for our liquidity module A or liquidity module B, right? So, or liquidity module C also. So that is that for this. So if you can see, this other block is right on our what? On our entry on that level. This point right here, you can see is inside that. So if you are taking it by, this is like a refined area of it, a sell, sorry, this is like a refined area. But nevertheless, we still wait for market to do what? To come back and give us a break of structure to the downside. Also confirm to us that what market is bearish before we continue. Either way, because market can still come back and take out these highs, because it's not more valid. Why? Because I put into the 50% discount of this break of structure, right? So that's what we're expecting on GBP USD. So that will be all for today. That'll be all for today. We are still expecting a lot of trades to play out, right? So we're still expecting this break of structure and giving us our liquidity module for us to target into this point on CJ, right? On CJ. On EU also, we have the same thing. Market have break to the downside, so we are expecting it to come back into our POI and give us another sell to the downside into this daily POI, which is also the last POI on the daily that have price, because all these points are liquidities. Hopefully, point of it might hold sure, but we are looking at the current price action, right? And also we still have a lot, but I don't want to go into all those points. And this also still expecting market to pull back and give us entry forwards to buy. But the top down analysis is looking um is going to be a lot. And this JU also tapped into our daily POI, expecting market to take out up to into this high. So you can see our targets are so high. So if you are looking for buys, if after this high has gone now, we'll now be targeting more high to the upside. So that's how to analyze markets. Now this strong high means what? A resistance zone. A resistance zone. So we are waiting for market to what? Come back into that resistance zone. As you can see now, this POI, drag it out. This is resistance. This is our POI for this. Drag it back. What do you see? Do you not see is a zone that market have reacted to so many times? You see it. It reacts to it. It came back. It reacts to a lot of reaction, bouncing, and then came back again. Still enter the same POI. Still reacts to it also. So that's the thing. When you still check your lower, your weak low, which is this point, drag it to the back, you still see that reaction. So that is the thing. When you're even trading the same thing, it's all in words, in market structures. They're all market structures, but it's just refined way. Instead of you start marking out everything, you can just look at where market bounces every other time and then you mark it out. So that's how what they call them, the people that trade this support and resistance, that's how they do. They don't do market structure like this. They don't analyze it this way. They will just look at the charts. They are professionals on their own way. They just look at the charts, look at where market bounces recently and what they will mark it out. But if you mark out structural liquid your structures right, you still see those things aligned up in that point, right? So that's the thing. That's the thing we're expecting. Now we're expecting market to still come back into this our POI and give us a sell, right? But though we are still expecting it to break out because it has tapped into our daily POI to the upside. So these are all things we'll be explaining to you guys, giving you a full details about everything. So even all these other strategies, they are all here. That's why when you learn market structure, just go for your favorite market, your statistic or anything that you want to learn. Just go for it, because why? You have know the basics, which is market structure. They can do anything, you can take any strategy you want to and go and learn it to apply it into this market structure. Like me now, I know market structure, then I use my liquidity module as my strategy to enter the market. Use liquidity module as strategy to enter the market. So that is that for now. Make sure you are following so that you always get an update on me every time I drop anything. See you guys. Peace.